Good morning from Chicago, traders. It's 8:01 a.m. Chicago time on the first day of April 2021. Thanks for joining me on episode number 1964. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me turn the mic down a little bit. Okay, so what do we have today? So big rally yesterday, end of month, end of quarter, and we dropped actually below the mid for the session yesterday, and we've recovered all of that today with talk of this massive infrastructure spending plan by President Biden's administration. Risk on sentiment today across the board, really very strong, relatively strong markets. Relatively strong markets. It looks like everything's green that I monitor, crude being the leader. Something to note, though, the crude oil has dropped from about 60.50 to about 59 and is now trading at 60.29. Crude has had its OPEC Plus meeting. The UA tanker tracker said that China is buying less. This is an oil tracking service. China is buying less oil. And there's a bit of an oversupply, and then the market responded by selling off, and then the oil minister of Saudi Arabia came on during the live meeting about almost an hour ago, and he says that stockpiles continue to fall. And sees that oil seas are still rough, and that caused things to turn back around. So that's where we stand today. I guess the cat has something to say about it, crude oil and all. So that's where we stand. It's, as you can see in front of you, blue and green across the board. Copper is lagging. But crude oil is the leader. NASDAQ's up 152.25 points. The NASDAQ led the push up yesterday before the rest of the market. Man, that cat, seriously. I'm quarantining this week because I had to travel last week, and so I'm working from home all week until my COVID test results come back, which is tomorrow. So sorry about the noise. Just needing to stay home and be responsible. Anyway, NASDAQ really squeezed on the open yesterday and led this attack on the highs, although it's still got a ways to go versus the S&Ps. The NASDAQ today is up 160 points or 1.22%. The bonds are up an entire handle, plus 6 ticks. So 38 ticks. Silver is up 16.5 cents, trading at $24.69 or 0.64%. The Russell's up 13 points. The Russell, which took quite a hit as we were pushing lower, was down almost over 10%, is grinding its way back. The DAX is up 75 points. The S&P is up 18.25 points. The S&P is just slightly higher than yesterday's high. It made new all-time highs in the overnight session. Of course, we have the 4K millennial figure just above us, just 14 points above, and that becomes a big target. There was a lot that traded on the close yesterday. I'll show you the deltas on those, the volume delta on those. And there was a lot that traded at 39.80 yesterday. A lot of volume went off at 39.80. A lot of volume went off at 39.70. And some volume went off at 39.75. There's some very clear areas of battle yesterday, but again, this was the end of quarter and end of month window dressing as well. The delta finished negative yesterday, despite the new all-time highs, which again is interesting. So that's where we stand. The laggard today is the dollar down 8.5 cents, trading at 93.15 on the June index, and that's where we stand. Where did we expect things to be yesterday? Here's the plan for yesterday. The plan for yesterday, I did expect a bit of a pullback, although the overnight inventory was slightly negative. I think it was down 10.7% or something like that. It was short 10.7%. I did expect it to pull back to the big magnet down below in the 40s, and then to form a base for a run at the weekly high, which was 39.68. Of course, I was way off on that. The secondary scenario is an immediate push up, a grind up, push through the overnight high, push through the prior day's high, and fall off to test the other side of the range down into 39, 34-ish or so. Both of those were off. Here's what actually happened yesterday. So despite the new all-time highs, we didn't get all that many rotations. We got a quick push on the open. So this is yesterday's open right here. This is the line, the pit open. And so we pulled back a couple ticks, and we immediately pushed to 67.50. Didn't really put in a clean opening swing low, and it took a while to get an opening swing high, so it looked like driving behavior. So according to our plans, we step back and we stay away from the short side, right? When we see something like this, we eliminate the short side unless it pushes through and it creates an impulse that gets below the mid. Then we're in a neutral posture, and then as it fails to push higher, then we engage on the short side, right? This what I just said just now, it sounds so obvious and kind of in your face, but it could save a lot of people a lot of heartache and a lot of money just to understand what is your bias. Yes, you don't want to come in with a strong bias. That is absolutely true. You don't want to come in and say the market's got to go up, or the market should go up, or the market has to, or it must. GME must go to $500. Yeah, good luck with that. So, but if you're putting on a trade, you have a bias, period. Having a bias based on market-generated information is different than coming in with a strong bias. Both statements have to be qualified by a time frame. So when you hear someone coming in and saying, hey, I trade without a bias, bullshit. Sorry, but that's not possibly the case, because you're putting on a long, your bias is long. That's you're executing your bias. And so knowing that I should not be short on an open that drives higher, it tells me that my job then is kind of cut down quite a bit. The effort on my side is cut down quite a bit, because now all I'm looking for is areas to get long. I don't have to worry about the short side. Identify risk, look for areas to get long. The first obvious pull was the mid at 61, solid entry, 61.75, 62, solid entry here in the 62.50, 63 area, and it just never pulled back. It never really breached that area once it tested. It took a long time for it to break through, but it finally pushed into 69, giving us, I was looking for the 68, if you recall, the 68 even weekly high was the target for scenario one. So 68 is 5 points, enough to cover risk, and then the rest of it is just sitting and waiting for the market to do what it needs to do. The next big area I had was 75.50. For those of you who get the master levels, that is a multi-level measured move area, and that's the next That was the next big scale out area. And then beyond there, we're looking higher into 89, and it ended up pushing to 83.75, consolidating. We formed several areas of support resistance. Here is one, here is two. These are clear zippers that the market's trading off of. Here's another. Okay. And if you look at where we are now, we're at 85. So we're trading up in here, and we have traded quite a bit in this zone right here in the overnight session. So we traded a fair amount between about 78 to about 84. This zone right here. And if we break away, that becomes the next box that includes the overnight session. What we do notice, though, and I wish I could clean these off one at a time, what we do notice, though, is that once the market fell below, it pulled back to the point of control of this zipper right here at 77, pushed below, pulled back to the low end of the range at 73.50, continued lower, pulled back to 72.75, lower high. And then it ended up finishing below the mid of the session. Also, once we made a high, the delta went sideways, and then it went negative on the close. It finished at 39, negative 39.39. Negative 39.39. So we ended up with a negative delta, although the open was a small ways below where we closed. This is a 4-tick Renko bar chart. This is a 4-tick Renko bar chart, and what we end up with is somewhat of a 2 distribution profile at new all-time highs. That's where we stand. Now we have a 4,000 magnet up above, and that's what we're looking for, is how aggressively will the market push into that 4K. Again, I just cannot ignore the fact that this thing just keeps putting in lower lows on the delta, on the cumulative delta on the daily. So let's take a look at that. So here, let's slide this up. Let's slide this up, and then let's slide this up. And here we are, new all-time highs, and it's just not able to get off the bottom on the delta. The delta has just been constantly falling off as prices have constantly risen higher. We'll see how this resolves itself, but this looks like hedges to me as the market pushes to new all-time highs. The futures are being used to head options and equity positions, probably at a very efficient use of capital because of leverage, and that's why they're not suitable for all investors. But if you're gonna hold a big position and use a minimum amount of money, futures are where you do it. So yesterday we left an excess at the high. So this sets us up for a rotation back into the point of control below, which is at 48 or so. This is what set us up coming into yesterday with a negative delta. So my expectation overnight is that we are likely to push lower and hold lower in the overnight session. The overnight session pushed to 64.50. Pushed to 64.50. The close was 64, and the low was 56.50. So no chance. So this, with the excess high, negative delta, I did expect it to rotate down into 47.48. Did not do so, and this is where that Monty Hall problem comes into play. We expect a certain behavior. We don't get that behavior, and that's a lot of good information telling us that this is relatively strong, and to not get caught up on the short side story. This being at the high of the prior session tells us that buyers are stepping in as soon as it dips below. They're stepping in and taking it back up. So you could see here it reopened in a small gap right here. This is where the cash close is. This is where the session closes, and opened in a higher gap, pushed up, pulled back to a higher low, and then drove up to give us a double distribution profile on the session. So let's expand this a little bit. On the extended trading hour session, so you can see here there's a very clear push to the upper end of the range where a lot of volume went off yesterday, and it's holding this 83 area currently after pushing for new all-time highs in the overnight session. The calendar has a fair amount in it. Has had a fair amount in it. We did get initial claims, which came in slightly worse. We do get the market manufacturing PMI final, which is not a huge high impact number. We do get ISM manufacturing at 10 a.m., which is a high impact number, expecting 61.2, the prior 60.8. We have got Fed's Harker at 1, and then the day is done, which brings us to tomorrow. And I want to remind you that tomorrow the equity index futures close at 9:15 Eastern U.S. time, 9:15 Eastern U.S. time, 8:15 Chicago or exchange time. We do get the non-farm payroll. This is unusual. We usually close the entire session tomorrow for Good Friday, but they're opening up for the non-farm payrolls, which come out at 8:30 Eastern. So the market will close 45 minutes after the non-farm payrolls come out. So I'll be here for that. There will not be a trader bite. There will not be much. Basically, we're shutting down at 9:15. Please remember that if you hold a position or you don't control a position into 9:15 and the market closes, you have exposure and a full margin requirement all the way till Sunday. So you're exposing yourself for the entire day Friday, the entire day Saturday, and almost the entire day on Sunday. Be smart. Close your position around 9 o'clock and go and enjoy your day off, whatever you want to do. So just bringing that up to remind everybody. Let's move on to what's expected for today. The market narrative is still the same. You know, we keep pushing higher. The pullbacks are being bought very clearly. Stocks making lower, stocks making new lows are anemic. The market is very, very much absorbing all the liquidity that's coming in. And the monetary and fiscal policy that's in play, and it's being translated into market gains. Today, I'm expecting, given where we are in the overnight inventory, which is 98% long, the overnight inventory is 98% long, my expectation is a response. I'm looking for this to respond back into 76 or so. The VWAP, one second. Into the VWAP base, come back into the overnight point of control and squeeze into this 89, 90 area, consolidate for a little bit, and then start to push later in the session before pulling back yet again. So small pullback into 76, looking for a push about 18 points higher. That's scenario one. That's in line with the current trend. The secondary, open, squeeze higher, push into 90, consolidate, squeeze through, then get an impulse down. Sellers are pretty weak. Consolidate at the overnight point of control, push down, and then move back into the prior day's point of control, consolidate at the prior day's point of control, and then finish the day in here somewhere in range. So we get the higher high, higher low, but we're finishing slightly weak. So that's where we stand in the session. We are opening on the edge of yesterday's high. and so it's relatively bullish. Just watch your, today, unless, unless the market does one of these, consolidates, has an impulse down, large impulse, like 15, 20 point impulse, and then pulls back and is unable to push through and attacks that low. I'm not looking, this is when I'm looking for shorts. So I'll engage with shorts on the break of the consolidation for the continuation. But other than that, I'm not looking for a short side at all. It's just, the short side is a scalp. One second. Short sides are considered scalps. Long sides are considered structured buy and hold type trades, and that's where I stand. You just got to go with what the market says. Good luck today, and I'll catch you tomorrow. Don't forget, tomorrow we close at 9:15 Eastern, 9:15 Eastern in the futures. Good luck.